we can solve these problems with logic. But again, the political rhetoric of, oh, he's stealing from you, or grandma off the cliff, etc. We need people that are willing to be term limited to go to do the right thing and then just bow out of Congress.
Welcome to Retire Smart with David Brooks. I'm Chip Maxwell. Well, David, I just have to mention it quickly. There was another successful patriotic parade this past weekend in Omaha, and we were in the forefront of it. You were there leading the Retire Smart delegation. The Purple Heart inflatable balloon, one of the highlights of the parade. Just give us your thoughts.
Oh, it's always awesome to see about 10,000 people show up. Love to continue to see that grow. It's cool to have patriotism is in style again. That's awesome. And it's just a great event. In fact, I just think, if you didn't get down there this year, you might want to add that onto your things to do next year, because you have tons of vendors out, right? Street vendors, art vendors. It's a great atmosphere. And, last couple of years, we've really enjoyed doing that. And it's a lot of fun.
Well, thank you to Bill and Yvonne Williams and Patriotic Productions for putting it on. And as you mentioned, that was part of the reason they started this. I think this was the 5th annual parade, is hey, we want patriotism to be back in style again. They love seeing parents and grandparents there with their children and grandchildren.
Absolutely. It's fantastic.
Soaking it all in.
And I think they had well over 100 entrants into the parade.
Well,
right?
Yeah, I can verify that because Mike Schudel and I were at the microphone calling out each one. So there were over 100 entries in the parade. It was a great time. Hey, we've had some significant news since last we visited at these microphones, David Brooks. We had a mayoral election in Omaha, and some found it surprising, some found it an upset that the county treasurer, former police officer, Democrat John Ewing, defeated the incumbent Republican Gene Stothert.
It didn't
Were you
surprise me.
surprised?
No, not at all. Listen, I believe term limits are a real thing that should be there. And, of course, those that are against them say, well, the ballot box is your term limit. Well, Gene got a term limit. And, again, I have praised Gene Stothert many, many times on this program. She was a pretty darn good mayor. We had a lot of economic growth under her tutelage and leadership. But the reality is the longer you're in office as a politician, doesn't matter if you're left or right, the further you get away from the people that voted you in. In other words, there's other things that might create or steer things. And I think that this came down to a referendum on the biggest issue that I had a problem with, which was the streetcar. This promising that it's going to serve the community, when the streetcar, if it was going to serve the community, it did not. And that's one of the things John Ewing pointed out. It did not serve the community he thought needed being served, in particular North Omaha. In other words, if we're going to do it, why not have it run to the airport? Why not have it run all the way out to Elkhorn if we're going to do it? In other words, make it useful. I would actually love to have a streetcar that ran, maybe right alongside Dodge or on top of Dodge or something, and maybe had 2 or 3 express stops at Regency, maybe around Village Point area, or maybe all the way out at Elkhorn, and you could park and ride and go downtown, have dinner or show.
So
or
if you're going to do it, make it more than a boutique novelty item. Have it really be functional.
I live out towards Gretna. You live down in Papillion, right? If you and your wife want to go downtown for a dinner, and we talk about it, you and wife do the same thing, Melissa and I. We like to walk around down. But if I'm going to go down to a show, I would love it if I didn't have to worry about parking and all that.
In other cities, you park at a satellite stop and then ride the car into the town.
In all of those other cities that you mentioned, not once has it been free. So, and that's the key point here, is the idea that you want to sell people on this won't cost the taxpayer a dime is complete lunacy. It's nonsense. And unfortunately, you had even the former president of the Chamber of Commerce, Dave Brown or whatever, kind of trying to sell that too. And I'm like, it's just disingenuous in my opinion. These are good people. I'm not, calling them out. But congratulations to John Ewing, first black mayor of Omaha.
Yes.
And obviously Omaha had some, you go back plus 100 years or so ago, there were some pretty nasty things that happened in our community. So I think this is a really nice thing to see that moving forward. Now, I now say, okay, what is it going to do for the business community? Because Omaha has been growing, so we want to make sure that we keep economic growth going. So, and in fact, maybe we'll reach out and see if he'd like to be on the show. I'd love to have him on the show. I'm in the unique situation that I do not live within the city limits, so I don't get to vote. However, I run a business that employs almost 50 full-time employees here, so I bring a lot of economic benefit to the city, right? Mm-hmm. And so
you're a stakeholder.
How do I get a say, when I don't get to vote in the election? So that's a unique viewpoint. But anyway, congratulations to Mr. Ewing. And, my dad is a retired police officer. I'm a big believer in helping support law enforcement. I think law enforcement does bring a unique because they have a lot of challenges in their day-to-day life. So I think anybody that's served for any length of time in law enforcement can become a pretty good politician, because law enforcement deals with negotiation, compromise every day.
Well, I can tell you this much, David. I think you will find, I don't know John Ewing that well. I do know him from what I know of John Ewing, fine husband, fine father, fine man, as you say, former police officer. He's been a county servant, public official. And I think you will find he is not, there's sort of a new strain of scorched earth, hard left Democrat. That is not John Ewing. He's more of a traditional, moderate Democrat.
We used to call that a blue dog Democrat, if you will, back in the day, right?
Right.
Well, and I think that Omaha is a center city, right? Omaha's a purple city. I mean, downtown for sure. Mm-hmm. And I have friends with liberal point of views. I have family members with liberal point of views. As we said, I'm a registered independent. I talk about it all the time. My wife is way to the right of me. I am a little center right, I guess. I'm fiscally conservative, and so I like to see the economics of things, which is why I think we could pivot into. And I have no idea what you've got teed up on the show today, but we have the tax bill. The first run of it got out of the committee in the House, and there's some things I like, some things I don't really like. But anyway,
let's talk about it.
So,
what do you like?
Well, they've got people holding back the votes on the SALT deduction. Now, personally, I want to make sure we're clear. If they raise the SALT deduction to $40,000, which is what some holdouts are saying,
state and local taxes,
right? So you're allowed to. You're limited when you write off your federal income. You can write off what you pay to your state. That was unlimited prior to this tax bill going in effect back in 2017. There's now what's called a SALT cap at $10,000. Well, I pay well over that to the state of Nebraska. So if they increase this, I personally will benefit.
I hate it.
As I think you should.
Sorry.
So it disproportionately benefits wealthier people that have higher property taxes. And so if you're telling me I can write off $40,000, guess what? I'll use all $40,000 of it.
And it rewards states that are not fiscally responsible.
Correct. So it's making taxpayers in states that don't even charge income tax.
I don't begrudge you a tax break, but I don't like it as a policy.
No, and I'm not for it either. And yet I'm going to benefit. I mean, if that goes in, that is literally going to put. I mean, I am a 37% tax bracket, an extra $30,000. So that's almost $10,000 in my pocket every year. Thank you very much, right? And I'll take it. I mean, that's what I do. I look at the tax code and I take advantage. But that's a $10,000 tax break to me. So it's not really helping the people that the people think it's helping. Anyway, that's we'll debate more on this once we have the actual final big, beautiful bill, as we're calling it, and we'll discuss it in much, much greater detail.
David, I'm going to bring up a headline here that you sent me, and then I'm going to challenge you with a devil's advocate question. All right, so the headline is from CNBC. J.P. Morgan CEO Jamie Dimon. Jamie Dimon, J.P. Morgan Chase CEO. We quote him often on this show. Dimon says markets are too complacent on tariffs. Expects S&P 500 earnings growth to collapse. But now my devil's advocate to Jamie Dimon, to you and others, because you guys are not alone, are you chicken littles who refuse to see sunshine and blue skies?
No. The reality is, so the market did this V-shaped recovery as if all is well and everything is settled. When
in what sense was it a V?
So the market shot down basically 20% and rallied right back up very quickly in less than 6 weeks. So if you were to look at a chart, it looks like a V versus more of a slow rise back up, a little wider slope or a 45-degree angle typically. So this violent rebound back up is assuming that everything has been settled when all we've had is the framework and a pause of the main trading partner, China, in this instance. They basically said, okay, we're going to charge them 30%, not 145%, for the next 90 days while we work out the framework. And that was, of course, Treasury Secretary Bessent went to Switzerland and met with the delegation from China, and that's what they came out with. And the market has used that as this big, everything's settled. Well, no, it's not. And then just this week, I don't think I even sent you the headline, but China accused us of being disingenuous in those trade talks that are ongoing, in particular to Huawei, whatever, the company that is their version of Apple, if you will, right? Mm-hmm. Anyway, so there's a lot to be settled. And on top of that, we're seeing that the earnings estimates have been going down every single day from major Wall Street firms. And that's what Jamie Dimon's talking about. Listen, for this price, we were rich, right? The market was overbought, if you will, to begin with. And then we had this correction, which brought it back to at least more normalized values. So now it's back up at lofty goals, which means we're expecting 18 or 20% growth on earnings. And I don't see that. I see 8 or 9% growth on earnings. And so that means the stock market is probably mispriced. It doesn't mean it won't go higher though, Chip. So there's no Chicken Little in it. It's just, we're just telling you what traditional metrics tell you about. Gives us an inclination of, is it a higher probability or a lower probability at this time that the market will continue on to new highs or retest at least some of these lows. And the probability says we'll have a retest. It doesn't mean it's going to happen.
Up next, we have a team of a dozen licensed financial advisors at Retire Smart. We have a wrangler who spearheads the effort to keep all of our advisors on the cutting edge of excellence. His name is Josh Cheadle, and he joins us next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. David Brooks is sought after nationally as a trainer of retirement planners, but he also constantly upgrades his own knowledge of best practices, and he demands the same of all the advisors on our team. The man who helps make that happen joins us now. David, please welcome Director of Wealth Management, Josh Cheadle.
Hey, thank you, Chip. Yeah, joining me in the studio is Josh Cheadle, who is now our Director of Wealth Management. Josh, thanks for taking time to stop in.
Thanks for being here. Thanks for the introduction, Chip.
So I think it's really important. We have been growing and scaling the firm, and one of the paramounts that I have preached to all the advisors on our team, which just keeps growing, is education, constant training. Iron sharpens iron, and so we did a nationwide search and landed on you. So,
I don't know why.
Well, I mean, just telling our audience that we actually did a nationwide search. I was skeptical actually to hire a leader in the company that from the outside. That can be dangerous when you're growing companies, culture, things like that. But we ended up hiring headhunters doing this nationwide search, and lo and behold, you live right here in Elkhorn.
Yeah, 10 minutes away. Yep.
Of all the candidates we search. And what's even funnier is your mom and dad, and I didn't even know this during the interview process, which was a couple of months long. Your mom and dad have been my clients personally for like 5 years or better,
Yep.
And so I think God has something to do with that. It's amazing how things all seem to work out. But anyway, we've been thrilled to have you on board for, I guess 6 months already now, right?
It'll be 6 months in a week and a half.
So, but anyway, I just want to introduce you to the audience. We'll have you on here regularly, but you have taken up a key role, which is helping continue to drive the education. As my role I've had to, I have new responsibilities, had to learn how to become a CEO. That's not the easiest thing to do, but anyway, so now we're constantly, and you've been inspirational in helping me scale up. I think we have 6 interns starting here right after Memorial Day weekend.
We're gonna be full of interns.
We're going to have a full house of interns this summer. That program has been expanding. So just so excited for the growth. And I love being able to educate these kids at school and go back. I think we have one coming from Iowa State this year. We had Kentucky last year. We got several from the University of Nebraska. I think we might have a UNO.
We do, yeah.
I think we have a Creighton. Anyway, so it's really fun to help get some of these the youth. As I always tell them in the process, and you sit in the interviews often, it's like, well, what you learn in school and what you do in real life, they're very, very different things. But anyway, it's awesome to bring these interns. So I'm just grateful to have you on board. So let's just talk about our processes and how we continue them. You worked for one of the largest national firms out there. In fact, you were responsible for basically I think you had about half the United States, right? Yep. And so you were responsible from older advisors to younger advisors. Talk about that experience and what's different here.
Well, everything's different. But to go to my past, right? Starting with, and Chip uses that phrase player coach quite a bit, but having been an advisor for many years in the past, and then moving into a managerial role where I was responsible, as you said, to upskill the advisors across a large swath of the country. That experience allowed me, as we look to our advisors, right, and identifying skill sets and building specialties amongst our advisors has been something that's been both obviously very, very rewarding and inspirational for me, right? And so you go back to working on the business or in the business and being the CIO and the CEO and all the things that you're responsible in doing, bringing me on to allow me to work a little bit more in the business while you work on it has been something that has really allowed our advisors and the team of individuals that support our clients to better support them and looking at ways that we can identify the specialties in the advisors so that if there is a unique need or skill set necessary for a particular client, we have that and we continue to grow that. And it's been incredibly rewarding.
Well, you bring some great points there because you were an advisor, and that was one of the requirements when, in the world when you're trying to fill top tier management roles, there's specific, there's what's called headhunters out there, but there's some specific to each industry, which is what we use. But I was like, look, I need somebody that's actually sat in the advisor's chair for a minimum of 5 years, but I also need that kind of experience on the managerial side and led a large team. And because we have a pretty wide growing team, and you had met both those criteria along with other folks that we went down there. But I love the fact that exactly now you just come to me weekly with, hey, I'm thinking about adding this to the training. Oh yeah, that makes sense here. And then I just give you the resource or where to go, because that's the thing as we scale and grow this and we're able to serve more clients, which is my mission. How do we serve more clients? We're approaching our 1,000th family here in Omaha that we will be serving. That number will cross this year. That's amazing to me, and you worked, and so did I for a long time at the big firms that are, have tens of thousands of advisors across the country. And it's hard for them to, when I talk to friends that are at the big firms, if you will, call them big box firms, whatever, for them to understand the scale when you start, if just a one-man shop, if you will, and then have scaled and grown it into. So anyway, it's fun having you along. Now, I think it's fun too, because as you figured out, I'm willing to spend the money to invest in the team, to continue to grow them, educate them. So we just had one of our coaches in. So we hire coaches to coach the coaches, right? So so you've gotten to know Paul now pretty good. Paul Carpenter is a good friend of ours and coach. He's actually been on, I don't think I've been on the show. I've been on the podcast, but not on the actual radio show yet. But anyway, so Paul's been coaching our leadership team for, I guess, about 4 years now. So tell me about that experience where you're like, okay, this is pretty cool. You actually bring people one-on-one in to coach the coaches, Right,
yeah, to your point, Paul was here just yesterday, the last couple days, so with our team for 2 full days to continue to upskill. And the majority of that team has been through and learned from Paul several times in the past. And what a neat experience to watch them continue to grow and to use your phrase earlier, iron sharpens iron, continue to sharpen their skills. Where Paul started is where I started, first in the industry. There was a process of learning how to engage with clients and prospects. That's where he started. And I learned that process intimately. And then as he continued to grow in his skill set, built a unique and similar process. And so I was familiar with some of the things he was talking about, but as I continued to learn and identify a way to best serve our clients, it's something that I learned a lot from. It's something that all of our advisors, whether they'd learned from him before or not, had learned from as well. So it is important that not only do you and I continue to grow in our knowledge and our skill set, but of course pass that knowledge along to our advisors, both tenured and brand new.
Well, and I think that's really important too, is why we do the team approach here. All these advisors, they have a really good base knowledge, intimate knowledge of the tax code. They don't get just about any place else. But we've kind of pushed each one of them into a specialty area so that they're able to not only teach the other advisors unique things, and you've gotten to see that firsthand, but then they also lead classes. We just had a charitable giving class. One of our advisor, Jacob, who actually worked in that world for a long time, leads that class. We have Brad Starkin, who is our certified digital asset advisor, who teaches a crypto class for clients that are just curious. It's not like we're telling you to invest in it, but so we're able to really just bring so much education and value to our community. And we do, I think, I have to check with Chip, but I'm pretty sure it was over 100 classes this year that we've offered through the Midwest Learning Center. And each of these advisors gets their own specialty and they lead these classes. And we've got you teeing up here to be doing some teaching and speaking here as well, right?
So the specialty, right? You had Colin on last week, and Colin's specialty is one that we utilize every single day, but we wouldn't ask an attorney to be a specialist in all trades, right? We know that phrase, the master or jack of all trades, right?
Well, no, and that's just it. Even Colin will tell you that. Like I always tell people, when you're hiring an attorney, hire an attorney for what they do, right? You don't want a bankruptcy attorney maybe doing injury settlement, et cetera, right?
Well, the second half of that phrase, right, a jack of all trades, is actually a master of none, right? And so we want our advisors to be able to serve all of our clients, but when a specialty is necessary, we want that specialty. And to go back to the teamwork approach, it's not a me versus you approach on our advisor side. It's they work together and oftentimes bring another advisor into the conference room.
You joke about that, but I literally had an advisor try to steal a client from me in the
Yeah,
lobby
you
when
told
I
me that
worked at
story.
that national firm. They'll try to take the client from you in the lobby. It was a very cutthroat kind of a business. Anyway, that's what's so fun here is we've built this system and we give younger advisors an opportunity to get educated, where unfortunately this industry would just chew them up and spit them out, very low success rate, because they just, it's, you have to be able to gather assets to be able to make you got to generate revenue for the firm, et cetera. So anyway, so I think it's just fun. So I'm so excited to have you on board. Look forward to having you on to our audience. So we are running out of time already for this segment. It was fun. So if you got one thing to tell our audience out there, what's something unique they need to know about you?
Yeah, no, I'm a family man. I love dogs. I love to be outside. So those are the unique things about me personally, but professionally, it's a daily growth process that I look forward to engaging with all of our advisors and our team.
Well, they're glad that you're here, and you've obviously been really endeared to the team. So we're just so excited to have you on board. But we are out of time for this segment.
Thanks,
so
David.
Chip, what do we got next?
Up next, you have questions. David Brooks has answers. Q&A is next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. And yes, by the way, to follow up on your conversation with Josh Cheadle, we do have well over 100. It's like 120 or 130 classes, events, workshops over the course of the year.
I can't even keep up with it. We do so many.
I know, because I'm at all of them. So believe me, we're busy, but we love it. All right, into the Q&A we go. David, the first question is about a possible tariff scam. It's internal. It comes from our colleague, Mary, who got pretty fired up. Here's Mary's question. Recently, I made a purchase at a store with no cash register. I used my phone. I did not get a receipt. I was told it would be emailed. When I later looked at the receipt for my $120 purchase, the bill included something called a tariff fee for $10. I was mad for two reasons. One, I felt gouged for an 8% surcharge based on nothing but hype in the news. Two, it was not disclosed at the time of the purchase, and I did not see the tariff fee as part of my bill before agreeing to the purchase. It came as a surprise after the fact. Has this become common practice in the retail market?
I have seen a few examples of this where people are putting these surcharges or tariff fees on. Now, whether or not it was disclosed, I will challenge you. It sounds like didn't pay attention at the register. So if you just did like an Apple Pay or something, you said used our phone to pay. So, lo and behold, you may not have paid attention what was on that little screen. It might have flashed. I'm sure it was flashed on the screen.
Yeah.
However, you have every right to vote with your dollars, right? And say, look, I'm sorry, I'm not paying that, So it's an increased cost, but rather than pass it through, I just think the retailer just ought to price their product where they need to price it, right? And you either say yes and buy it, or you don't.
So if you need to nudge up the price, do that, but don't provoke your customers by sticking a tariff fee. Are they trying to blame the Trump administration?
So what they're trying to do is exactly, this is a retailer trying to take the blame off of them for this increase in price. But the free market works, right? If I import a good and you import a good, and we both have to pay, say, $10 in tariffs on this good, we both going to sell our product. One of us going to sell it cheaper than the other one. Who's going to get the business? So just price it where you need to price it. And it's really weird how economics works out that way, right? But anyway, so unfortunately, though, we are seeing people take advantage of this. And of course, there was a big hubbub about Amazon. We're going to list all the tariffs, and Trump kind of went after them, and maybe we're not going to do that.
They backed off.
Yeah, they backed off. Yeah. Well, right now there's a lot going on with Jeff Bezos and cloud computing, and again, most people think Amazon's retail shopping. That is the smallest business they have now. I mean, they are a cloud computing company, AI company, right? And so that is where they're trying to be. They want to be on the friendly side of this administration because they want to be able to grow that business. But
wait a minute. You're saying their retail operation now is the smallish part of their operation?
Yes.
So that's massive.
Yes, it is massive, but
I just want to make sure I understood.
It's a cash cow, but they have built so many other businesses out. What's called AWS, which is Amazon Web Services. There is more traffic goes through there than any other site in the globe, including Google. Right, so they're bigger than Google when it comes to server, space rent, and most of the websites you go to, the retail shop that you may buy these tariff products at, is probably powered by their websites behind the scenes.
Before I let this go, part of Mary's frustration was she said, "Well, all right, if you're going to tell me you got to hit me for $10 for tariff, well, what materials exactly? I mean, when did they arrive? Did they arrive here prior to the tariff taking effect? Is this a tariff that is actually
my
taking
beef
effect?
would be if, and
some
again,
of them haven't taken effect yet.
I believe they have the right to price their business the way they want, but I should think you should put the real tariff. The other thing is, I think people need to understand is the tariff is not on the finished price, right? And so that's where I think you can feel you're getting gouged. So I tried to explain this a while back, but if I were buying a hoodie, a pullover hoodie or of a band or something, but that hoodie was manufactured somewhere that has a tariff. If let's say it has a 10% tariff on it, when that comes in wholesale to this country at say $25, the tariff is $2.50. Even though they may retail that hoodie at $89 or $100 at the concert, the tariff is not on the retail price; it's on the wholesale price that the good came in. So if they disingenuously then made that a $10 tariff fee when it was actually $2.50, I'd be pretty upset. So that's where I just think, hey, just price your business. Don't try and do this because you're going to end up losing the faith. And I believe, as you mentioned off camera, that Mary no longer uses this retailer, right? So just left. Yeah. And again, retailers, be careful what you do. I think the bottom line here is look, here's a great example. Target just reported, we're recording this on Wednesday. Target reported earnings this morning, and they were dismal, right? They're one of the bellwether shops. I always talk about Target and Walmart because that tells you how the everyday consumer's doing. And they blamed the backlog, or they got some backlash for canceling their DI policy. Well, if you remember, 2 years ago, they lost a ton of customers because they implemented DEI. So now they're blaming the walk away. So now they pissed off the right side of the political aisle shopping and the left side.
Yeah.
So the lesson here is just stay out of
it. Yeah.
Stay out of politics. Provide a good quality product at a reasonable price, and consumers will come happily buy it. But the minute you stick your foot out there on the political side of things with a product, guess what? You've got about 46% of people will never buy your product, and vice versa. There's only about 10% people that are kind of undecided in the middle. So we are very partisan with this stuff. So why did the retailers just learn from this? Companies, look, Disney should take that lesson, right? I mean, there's so many companies that can provide quality products that people will happily buy, but their politics, I mean, my wife is that way. So she will simply say no. She will not walk into a Target, period. She won't go to Disney. There's no Nike stuff in our house. We're not allowed to have it, right? I mean, it's just, now I'm not that way. Just, I just, in the same fashion, but my wife is hardcore about this stuff, and there's a lot of passionate people in these things. So companies, the lesson should be learned here, stay out of this.
This is going back about 15 years. This is before your time even in Omaha, but when the city started imposing an extra surtax on restaurant bills.
Oh, yeah, that temporary restaurant tax that I've been paying since I moved here. Yeah,
sure. The tax still exists, yes. Yeah.
Isn't that weird?
Exactly. Well, and some restaurants would, on the bill, they'd have mayor's tax on there because I don't want to be blamed for this, but I don't know. Probably the best course of action, as you say, is just navigate down the middle, stay neutral. Don't go either way.
I buy a lot of dinners. I spend, in restaurants, I spend over $100,000 a year because of all the dinner events that we do, right? Sure. So I spend a lot, and when I start seeing this tax, I'm like, well, wait a minute. So I'm paying over $10,000 a year in a supposedly part-time tax, right? Yeah. So I guess I do want that SALT deduction to come in after all to give it back, right?
Fair enough. All right, let's move on to the next question, David. This is about the need for planning, or maybe I should say the alleged need for planning. I'm a longtime listener, and I appreciate what you do, but I'm a lifelong bachelor who will retire next year at 67. With my pension and full retirement Social Security, I feel like I'm set. I don't need to do any additional planning. If I hire you or some other retirement planner, am I just paying someone to tell me to stay the course?
Look, it's a great and fair question, but what you're addressing here is you feel that you've got income covered, right? That's one piece of a fully, vetted retirement plan. Are your investments, are your assets, and maybe you like doing the investment side yourself too. Maybe that's two parts. But do you understand what's going to happen to your assets when you're no longer here? Are you aware of the additional tax penalties you're going to pay because you've been blessed? You're single, so we know you're going to hit what's called IRMA penalties. You may not be aware of yet, but that's coming because your pension, your Social Security, and then if you saved any money in traditional retirement accounts, you're going to have a required minimum distribution in about 5 years.
IRMA is a Medicare penalty, right?
Correct.
If your income is too high for a certain
it's just $103,000. I don't know the income level, but most people with pensions, Social Securities, those two numbers For most of the people that we deal with here in Omaha, those two numbers combined is north of $85,000. So the Medicare limit is only $103,000 for a single filer. So if your required minimum distribution on your retirement accounts is going to be over $20,000, you may be paying two taxes you're not even aware of, and that's Medicare Part B and Medicare Part D. And just another $25,000 up, so a couple more years of RMDs, you'd be paying two more levels of those taxes. So there are so many facets that most people do not even think about when it comes to it. So look, maybe you are good, and we're happy to tell a lot of people they are. Not everybody that comes to see us needs to hire us. I want to be clear on that. But you don't know what you don't know. So I would just tell you, is it worth getting someone to run the numbers? We offer an evaluation that looks at all 5 areas. We call it a report card, and that's just it. It's just an evaluation. We're not going to tell you what to do. No
obligation.
But if you want to have that done, we'd be happy to do that, just so you know what is it that I might be missing. And so I like that you're confident where you are. You're looking at where you are, but maybe there's something you're missing. And by the way, thanks for being a longtime listener. We do appreciate you.
Up next, how about $1 million pastrami on rye? The saga of the $100 million New Jersey deli shop comes to a conclusion. We'll tell you about it next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. David, I do want to get to that New Jersey deli. But first, you did share a headline with the team that, you thought it was very important to bring it to our attention. It was from CNBC. Ray Dalio, another person we cite often on this show. Ray Dalio says the risk to U.S. Treasuries is even greater than what Moody's is saying. Okay, Dalio, of course, Bridgewater Associates, a major figure in the financial world. Why don't you first explain to us what Moody's did and then give us your take on Dalio's take?
So Moody's downgraded U.S. debt from AAA to AA1, right? So we are no longer this AAA credit. Now, this is the third downgrade the U.S. debt has got, but the most prominent is this first happened, 14 years ago.
That's going to hit me in the wallet as a taxpayer. Why?
Because it means yields go up. So
you got to pay more when you pay it off.
Right. So it means
higher
we're a
interest.
riskier bet. So people are still going to buy U.S. Treasury, but they're going to demand a higher interest payment to buy that debt. There's more risk involved in buying it.
This comes up periodically locally when Omaha's AAA rating is threatened or drops. Same thing.
And it did. We do not have AAA
the city
rating
bond
here.
is going to cost
and
more.
And the streetcar's not going to get you anywhere closer. But anyway,
I didn't want to get you onto that track. All right.
Anyway.
So
we have 300, and this is by my count, so I don't have a source for this, so my compliance hours are going to yell at me here, but it's approximately $321 trillion in debt between sovereign governments and corporations in the world today. Interest rates have moved up over the last 2 years, Chip, by about 200 basis points, 2 full percentage points. So what's 2% of 300, Chip?
Well, let's see. 10% would be 30. So 2%, what's that going to be? About 6. Okay.
$6 trillion in additional interest expense around the globe right now. Do you know that that's over $750 for every man, woman, and child on the planet? On the planet. $6 trillion.
It's hard to
we
wrap
only have
your
8
brain
billion
around
people.
That. Yeah.
Yes, that's just additional. Every man, woman, and child, additional interest every year now has to be paid at $750. Where is that money coming from?
Well, the problem is it's just going to be generated,
so
apparently.
To pay the bill, you will start running the printing press, right? We've seen that last 15 years.
Whether you do it physically or electronically.
The Euro, the EU, here, and that is what Ray Dalio is talking about, right? He's talking about, listen, earnings are, hurt, and higher rates make earnings harder for companies because capital costs more. But the only way we can really pay our way, if Congress doesn't get serious and start cutting spending, the only way to do this is they're going to fire at the printing press again. It's just a matter of when. Politically, they don't want to say they're doing it. But then what does that create? Monster inflation again, right?
So it's a double whammy. Not only do I have to, on paper, pay off at a higher rate,
but you're printing more.
But the dollars in my pocket
are going to be
my
worth
return,
less.
The dollars I'm paid on my return for a bond or anything else are worth less because of the inflation. Oh, this is giving me a headache.
Yeah, so we have to get serious now, and that's where I got excited about Doge. And it have to seems to be somewhere between 200 and 300 billion in savings they have officially found. But that's nothing at the rate we're spending, right? And here we are about to pass a budget bill with another 2.8 trillion deficit spending, and we have to get serious. And so this is for the new mayor here of Omaha. You need to keep your budget for pilling here on the state level and our legislators. You got to keep your budget, your school boards. And guess what's about to happen? Your valuations are going up all over town right now, right, on this real estate. And so they're getting this big cash influx thing. Oh, our budget's fine. No, it's not, because houses are going to go back. Anyway, we're going to get too far off the tangent. This is a real problem. Now, Ray Dalio has a brand new book that's being released, I think, June 6th. I was privy to get an early copy of it. It's called How Countries Go Broke. And it's fantastic. And we'll probably dive into this a little bit more going up for limited for time today. But this is a massive, massive problem. And that's where the cost of capital goes up. So we've seen interest rates skyrocket over 20 basis points. The 30-year, as we're sitting in today, the U.S. Treasury 30-year chip is over 5% today. That means mortgage rates are higher. So mortgages are well over 7%, on their way to 8%, which is going to really harm our housing market. And I've got neighbors that have their houses for sale, and I kind of laugh when I walk by them. I walk my dog every day, and I'm like, there's no way you're getting the price you've listed at. The gentleman bought this house. I've got a neighbor that moved in just over a year and a half ago, and he's increased his price by about $200,000 from what he purchased. I'm like, that's just not going to fly. And I don't know why the real estate agent professional even dared list it at that price. He's probably 70, 80 grand over what he will get. But anyway, you're going to see some changes economically in the housing market, et cetera, from this debt.
All right. On to New Jersey, on to this deli. I just get such a kick out of this story. I mean, it's fraudulent, it's bad, it's criminal, but there's something, well, here's the...
Sadly, it's comical.
It is. The CNBC headline is $100 million New Jersey deli fraudsters, father and son sent to prison. Maybe you better recap this case for us and then give us the update on how it all turned out.
This was just one of these outlier stories I found, I think, well over 2 years ago we've talked about this like this is the fourth time, right? Because it was just such a unique story that this deli tried to go public, right, and raise a bunch of capital.
It's just a freestanding, a standalone deli. It's not even part of a franchise.
Yeah, it's a little standalone shop, and they basically were cooking the books, so to speak, to raise capital, and over $100 million. And I told back then, this is basically a Ponzi scheme, the old-fashioned pump and dump. We covered it. Well, they got caught, and we covered that last year. It came down. Well, now they've actually been sentenced after appeals and all this nonsense worked out. So it's a father and son, I think Peter Corker, senior and junior. Coker, yeah. But the kids end up doing like 4 years in prison. The dad, I think, is going to do like 6 months, et cetera. But people lost all this money. It wasn't recovered, right? So people are out millions and millions of dollars. So if something sounds too good to be true, it just might be, right? Well, the lesson learned here is because we had someone call in, Chip, recently here, a company that does some mining right here in our great state of Nebraska, living the good life. And people were like, because of the tariff deal, the rare earth materials are going to come out of our mines here. And so it was this penny stock that's publicly traded that happens to have some operation in Nebraska, and somebody was hosting presentations like in someone's basement pitching this. And so the client called wanting to take a distribution, a very large, and buy it. And I'm like, no.
Red alert.
And you see these stocks go from like 3 cents to 12 cents. They get, look, it's going. And then it's back down to fractional cents. These are called pump and dumps, right? So as a fiduciary, we never will buy a stock that's under $5 that's not on a public exchange, right? Because they're financially they could be insolvent, they could get delisted from the exchange. There are many problems with this stuff. But anyway, the point here is that's risk management. That's the R in our SMART plan. Do you understand? Things come in, they sound great, et cetera. I mean, let's go back to the Omaha School Board. No fiduciary-based advice, no investment advisors licensed on their counsel, and they went and lost $200 million of the taxpayers' money on absolute crazy investments, and they still have not formed. And I volunteered a couple years ago, I don't know if you remember that, on your show when you were on public radio airways. Get a counsel. We will be not paid. Get 12 to 16 investment professionals that have credentials and experience to at least come in and help you choose these investments. But anyway,
my blood is boiling because 20-some years ago, I was a state senator when OPS said, no, we don't want to be part of the state teacher retirement system. We're going to run our own game. We know better.
By the way, who's going to fund those pensioners? Because the money's still not there. Yeah. The gap has not been closed. So guess what? Another bond deal will be floated here shortly. Oh, wait a minute. Who's going to pay for that? Man, that streetcar sounds really, really good right now, doesn't it?
These fraudsters, the Jersey Deli, hometown deli, they must have been good. I mean, Vanderbilt and Duke were among some of the major investors in this. It was finally a hedge fund manager who said, boy, the pastrami must be amazing at this restaurant, because as
And let me
far
tell
as
you,
I can see, there's nothing else here.
I love a good pastrami sandwich, and in fact, I've got a couple places when I go to New York, and I'm taking a couple of advisors with me to the New York Stock Exchange actually later this summer, and that's one of the things I'm already thinking about is when you go to New York, there's certain things you got to get: is a good bagel and a good pastrami sandwich.
David, let's squeeze this in. You mentioned that when Moody's knocks down your rating, that has costs in terms of what you got to pay in interest rates and maybe inflation when you generate currency to pay more. You sent the team a chart about the U.S. debt downgrade. You said it's not a nothing burger. Why?
Well, so there were many pundits saying, hey, this is a nothing burger. It's no big deal. So what you have is that next morning I showed 2% interest, a 2 percentage point increase of interest rates, not only here, but Germany, France, the United Kingdom, Spain, everywhere across the globe is paying more because we're the central reserve currency of the world, right? And that's not going away anytime soon, folks. But we are. So if it costs more for our debt, it costs more for the countries that invest in our debt. And all these countries are having to pay more now. So that's what I was saying. It's a $6 trillion problem interest, as I mentioned earlier in the show, that all these countries are now having to pay higher yields, higher rates, and then inflation's ticked up. So the UK this week just reported 3.5% inflation, well above their expectations, which means they're going to have to raise the rates even more to fight inflation, right? And that means the debt spiral is back out of control. So we need austerity measures. We need the Congress people to get serious. And again, nobody's trying to cut Medicare or Medicaid for anybody that's on it, but we must make reforms to these programs. We must get serious. If you're under the age of 50, I'm sorry, Social Security needs to be pushed back 1, 2, or 3 years based on how old you are. You didn't start working till later in life. That's proven statistically. So, and you're going to live about 6 years longer than your boomer counterparts. So why not have you start drawing 1, 2, or 3 years later? We can solve these problems with logic, but again, the political rhetoric of, oh, he's stealing from you, or grandma off the cliff, etc.
Yeah.
So we need people that are willing to be term limited to go to do the right thing and then just bow out of Congress. By the way, would you like to run again, Chip? I hear there might be an opening in District 2.
Look at the clock. We've got to go. That will definitely do it for this week, folks. Please visit our website, retiresmartnow.com, and click Attend an Event at the top of the page to see everything we currently offer. No charge, no obligation for our events, but you do need to register. You can do it online or by calling 402-369-7777. David, bring us home.
Hey, have a blessed and prosperous week. We hope you were at the parade with us.
Thank you for listening to Retire Smart with David Brooks. I'm Chip Maxwell. For David Brooks and the entire team at Retire Smart, have a great week. Bill and Yvonne Williams are current clients of Retire Smart and were not compensated for any implied testimonial. However, Bill and Yvonne Williams are the founders of Patriotic Productions, a nonprofit 501c3 organization, and as such benefited from the charitable donations made by Retire Smart to Patriotic Productions for sponsorship rights to the Patriotic Parade and Purple Heart Float. Patriotic Productions was compensated for this sponsorship and endorsement as such term is defined under SEC Rule 206, subsection 4-1. For further information, visit retiresmartnow.com/patriotic productions disclosure.